The South African Reserve Bank and National Treasury are on the same page. Our inflation target range is too wide and misaligned with global peers. But as policymakers debate the numbers, ordinary South Africans continue to face the pain of high interest rates. Business reporter Ntokozo Khumalo has more.
The General Industries Workers Union of South Africa says the Reserve Bank reviewing its inflation targets is neither here nor there, adding that what people need right now is a drastic cut in interest rates.
People are losing homes instead of buying new ones, right? People are losing vehicles. People are losing all sorts of things and mega, assets that they've accumulated, furnitures and so on, because they can't keep with the interest rates and the cost of debt service due to extortionate interest rates that we have.
The repo rate, which is what the SARB charges banks to lend money, is sitting at 7.5%. Giwusa is calling for the rates to be cut to 3.5%, a level last seen in 2020 at the height of the coronavirus pandemic. Cosatu's proposal is less drastic. It's calling for a 50 basis point cut to ease the burden on workers, inject cash into the economy, and help households drowning in debt. Home loan provider Better Bond is more cautious, suggesting a 25 basis point cut would strike the right balance.
I'll leave the inflation targets to the clever guys at the MPC, but I'll say this: we have historically always followed the US Fed. When the Fed cuts rates, we cut rates. So we're intrinsically linked to the US, but the Bank of England and the European Central Bank lowered their interest rates, and we are really hoping that we follow suit, simply because our inflation targets have been met.
Seif Property Group chairperson Samuel Seif says the 25 to 50 basis point cut isn't just desirable, it's essential, calling it a pivotal moment for South Africa's economy. MyWay Legal also backs a cut, especially for heavily indebted consumers. It says many are still paying debts that may no longer be legally enforceable, even though the National Financial Ombudsman has resolved more than 60% of such disputes.
So reducing the interest is great, but that doesn't really change the overall total debt outstanding. It doesn't really change the monthly installments that the consumers are still liable to pay, because that's still a contractual agreement.
The prime lending rate, which is what commercial banks charge consumers to borrow, is sitting at 11%. The Reserve Bank will deliver its latest interest rate decision on Thursday. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.